Hey folks, Friday. It's Friday. Another week has gone by. Friday, August the 20th. And welcome back to Money and Politics. I'm not going to make this real long. I got held up. And now as I record this at 6:30, I normally do this about 4:30, but I had to get some stuff done. I was on the phone with one of our friends from Humble Nation gaining more information. So, number one, when I talk to you, it's not just me blowing smoke all the time. Sometimes it's me talking, putting it through the filter of my own experience. But I'm also doing the same thing I do when I do reporting. I'm talking to people who are knowledgeable in some field that I'm not, or gaining more information on insights of some of the stocks out there. And one of the things, and I know I've mentioned this before, and I really haven't done it in part because I've been sidetracked, like we all get. But I want to be trying to do some of these interviews with some of the CEOs of different companies. And so that's something I'm working on and look forward to bringing to you in the hopefully near future. Now, that said, let's have a little drum roll because I know it's been a long time since we could celebrate a green day for Humbl, but we got to do it today. You know, I'm not popping the corks again when we're as low as we are, but when you get this cascade of red days, and one of the things I was saying to my friend from Humble Nation here, I just don't want to be sharing people's names, was that even though I know what I know, it's still not a good feeling when you every day tune in, look at your portfolio, and there's, humble down, humble down, humble down, and it's a painful drumbeat. I'm the guy telling you to hang on, and I'm not doubting myself. I don't want to make anyone say I'm doing that. My point is just that I know how hard it is to. I know how hard it is. That was a slow transition. I know how hard it is to hang tough when it just goes on and on and on. And as I have said to you, and I'm just saying this to remind you, it's the emotional aspect of investing that is often the hardest to learn, not the intellectual. A lot of people go, I couldn't invest. I'm just not smart enough. And I say, yes, you are. You may not be able to have the emotional stamina because not that you stick with every company that's going down. You shouldn't. There's some companies that are going down, and you bought them, and you just bought them for the wrong reason, and you do admit your mistake and get out. I don't think that's the story with Humble, and I'm not saying that. What I am saying is, even with a company like Humble that has so much promise and potential, and it's new, it's still, and I relate to it. It's not like I'm immune to the emotions, but this is what I'm just telling you when you're learning, and I'm like highlighting this with a yellow highlighter right now. That's what I'm saying. That this is the kind of thing where day after day you got to be able to stomach. You got to develop the stomach to hang in there on a stock that you know has promise, but it keeps kicking you in the stomach every day, and it hurts. It hurts emotionally. It's depressing. So when we get an up day, and frankly, I'm not even sure why we're up today as compared to down because there was no particular news. And I think this chart, as we look at it now, is kind of interesting that here we were down and then we pop up like about a dime to 11 cents and kind of held that position more or less throughout the day and ending up at, you see, let's call it 80 cents. I mean, you can see the number right there. Basically at 80 cents. So we went up from about 65 cents to 80 cents. So we're not singing Happy Days Are Here Again, but again, it is nice to see it pop up. And as I point out, we had actually very heavy volume here relative to the average down in the lower left there. The recent average daily volume here is of 7 million, and the volume today topped the average. So it wasn't like we were just doing 1 million shares. No, we did over 7 point basically 2 million shares, rounding up. So there's that. As we move along, real quick, and I bring this up because of the Delta virus, and here I thought oil would, and I told you I was buying DIG, the leveraged ETF on oil. I was buying DIG in November at 63. It since has done a 2-for-1 split. So when you compare $63 to today's price, that's like $63 to 104. And this has come down recently, and I think because of the whole Delta virus and the concern that we're not going to open the world economy as quickly as we thought we were. This is a 1-month chart. I think this might be now a buying opportunity for you to get into it. Let me go to a 6-month. You kind of see how low we are relative to the last 6 months. I think this is a reflection of the concern that, oh my God, every time we think we're out of the woods on this COVID stuff, no, we're back in, and they're talking about putting masks back on and more mandates and one thing and another. We cannot do without oil. I don't care what the environmentalists say. You cannot do without oil. And we're going to be using oil for a long time of necessity. And so, as you know, this I think is a buying opportunity. I think at this price, there could be some downside, but I don't think the downside is significant. I think there's more upside than downside. So there you go. And you get about a 1.8% dividend yield, nothing to, write home about. But if you got cash you don't need, remember, keep some handy. But if you got some, amount of cash that's sitting there earning nothing, you also get a 1.8% dividend yield based upon the current price and the current dividend. So I wanted to bring that up. And then the other thing, and I've taught, and folks, sometimes I mention, a lot of times I'm talking just about Humbl on a lot of days. I do want to, though, follow up with some, like I just did with DIG, and as I've told you about other things, I do want to follow up with, I'm looking around thinking, didn't I just have, which I'm missing a chart. I want to follow up on some of the other things that we've talked about because it's easy to forget them if I don't follow up with you. So one of as I said, my favorite stock is InMode, one of my very favorite. And 2 days ago, Investors Business Daily came out with this article, IBD Screen of the Day, the 3 top global growth stocks are near buy points. And what are among the 3? Well, you go down and kaboom, there it is, InMode. And it says here under the, if you look at the second paragraph to the right of the chart, IBD stock checkup, it says IBD assigns InMode a best possible 99 rank for its composite rating and earnings per share rating. The earnings per share rating reflects a 161% 5-year compound earning growth rate. Analysts expect profits to rise 55% this year and 7% the next year. Over the past 3 quarters, revenue is up an average of 186% year over year. So this is why I wanted to say it's not just me. Investors Business Daily. And again, that's more reason why you want to, these numbers, I wanted to share these numbers with you. Again, if you're loaded, put some money into it. If you're not loaded, I would say buy 1 share, buy 2 shares. It was up today to close at $118.52. That was up $9.92. Which was a 1-day increase. Let me verify that. I was going to say of 9%. I'm saying that, but let me verify because I might be, I don't want to mislead you here. And make sure that's not 2 days ago. Okay, so we're at 118.52. Is the price, $118.52. I think the other day when I was talking to you about it, it was like around 115 or so. Anyway, so I wanted to bring that to your attention, that Investors Business Daily was also talking about what went right. You know, speaking of money and politics, we'll have to keep an eye on the TQQ. And the TQQ, which is also, that's the 3 times the Nasdaq leverage version of the Nasdaq. I would generally say put money into that. It is up 1,250% in the last 5 years. Just crushing the other indices. Of course, this is a leveraged indice. And so you saw now that we are currently, TQQ is at $135, up $4, a 3% move. Again, if we look at it over the last year, a very nice gain. Now, this is going to go down 3 times as fast as the market if we get down, if we start going down. I think this economy, because we still have low interest rates, which I don't know how long, even the Fed might begin to move. Let's talk about this for a minute. The Federal Reserve of America might begin, and I think they will begin over sometime between now and the end of the year, they're going to cut back on the amount of purchases they're making. The Fed is investing $120 billion a month through the Federal Reserve into the economy, buying bonds, buying treasuries. They're going to taper that, not buy as much. That means we're going to be starting to see interest rates go up. We already see some signs of inflation. Those are both things that are going to hurt the market. So I don't say it's clear sailing. You can buy this. Don't bet the farm, the TQQ. And if I go to a 5-year chart, you can see it has grown pretty nicely. This is much more volatile because of it's a leveraged index than the underlying market. But again, it was up 125%. I don't know if I'm going to get a comparison here from, I'm not, but let's real quick. This is the TQQ, the line in blue there. And if I compare that to let's say the overall market, the S&P, I'm going to make that red so we can see it. You can see how much over the last 5 years, the S&P has gone and the TQQ. Let me make sure I'm on this 5-year chart here. There we go. It was not. Okay, so this is a 5-year chart where the S&P is up 101%, and you see there the TQQ, the 3 times the Nasdaq, is up 1,212. That's why I tell you to buy it, because you're going to go up and down. You can see all the jagged lines on the blue line, much more volatile than the red line, which is the S&P 500. But do you want your money growing 101% over 5 years, which frankly is not bad at all, or do you want it to grow 1,200%? I think we know the answer. And if you want to compare it to the Nasdaq, remember the TQQ, the blue line, is 3 times the Nasdaq. If we compare it to the Nasdaq itself, which is a yellow line, you can see how the leverage version of the Nasdaq is just trouncing the Nasdaq itself. And folks, this is the secret sauce. This is what I tell you. No one else is going to be telling you. In fact, if they tell you anything, they're going, you don't want to be doing that. You're gonna get hurt. But I would keep in mind that we have issues with the economy. where we've got COVID, where we have even this Afghanistan thing, which really shouldn't directly be impacting the economy, does put a lot of negativity into the market. It also undercuts politically. This is money in politics. Joe Biden, this is the biggest, one of the, if not the biggest screw up. I think this might be the biggest screw up in my lifetime with what Joe Biden has done in Afghanistan. I'm certainly not the only one saying that. Other congressmen, senators, members of the military who have retired. So you got to watch what this might portend. And as bad as Afghanistan is right now, it could get worse. And I don't even want to talk about how it could get worse. But it could get worse. And so as investors, while we look at the numbers, as I just shared with you on INMD, and we go, here's the growth rate, and here's the ratings and all that, we also have to pay attention to the world events, geopolitical policies, geopolitical events. This is why we're money in politics. That impacts your money, and then all of a sudden, boom, you can get hit like a semi running over you. This is what happened back in '08. I mean, without going, I could speak for hours on that. But all of a sudden, the market collapsed and fell 40% in short order in the fall of '08 because of bad policies in lending, bad policies by the federal government. So I bring that to the table following both politics and investing. Right now, I would say oil, because there's no getting around that you're going to need some of it. Don't go hog wild on it. But right now, again, you can buy the dig at 52. You can buy the, it's the wrong one. You can buy the TQQ at 115. Okay, 108, what is it? Confusing myself now. We are at, in the TQQQ, we're at 136 or thereabouts. So, you can buy some of that. So, and on Humbl, let me get back to Humbl. I didn't mean to ignore it. Humbl is Humbl. And I think, as I said before, I think we were buying the dream from January to June. We are in August now. We got the second quarter earnings. It's going to be about execution. And so we're going to hopefully be getting some more news updates. We saw that Humbl is doing a lot on that front of news. We have new advisors. We've had the revenues. So I'm still saying, hey folks, I think Humbl is something to hang on to. Okay, don't be overly discouraged. By that all said, I know you want to get on with your weekend. I want to get on with my weekend, and I hope your weekend is a lovely one. Do, if you will, do give me your thoughts. Tell me if you want me to look at something else. Tell me if you're encouraged, fearful. Tell me whatever you want. And we'll hopefully be talking to you on Monday, I think. I don't know that I'll do anything over the weekend, but if I do, I will. And if I don't, have a great weekend, folks. We'll talk to you soon.